Per usual, everything on this channel is for educational purposes only, is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts. Whole lot of legacy setups this week, and I mean a whole lot of legacy setups. Crypto still on the struggle bus a little bit, especially outside of BTC. BTC still hasn't shown mega strength yet. It's still in the recovery realm. On the ETF front, we are seeing positive flows day over day, week over week. August as a month down here, still plus 200 million, just kind of nothing on the month. But on the week, we're clearly swinging up. And we're hinting at a new all-time high in cumulative flows for the year, which would be above 17 billion. So we're heading in the right direction. Seasonality for August, September historically is not bullish. It's muted at best. So we will probably have to remain patient. And the TLDR for the video is you may be better off focusing on legacy for another couple of weeks and just waiting for the all clear signal on the crypto side. On the ETH ETF flows, really not seeing anything. Mainly been outflows. The cumulative net flows have held negative for ETH. So nobody seems to really care about ETH at the moment. And this, of course, is baked into ETH BTC and everything else. ETH versus BTC as far as ETH beta versus BTC beta. My guess is we will see this flip positive, but it will be later on in the year, probably November, December, even into Q1, which is when ETH tends to do better in the first half of the year. And it's not like it's going to be a surprise. You can just watch the flows every day like I do. And if they trending positive, then to expect good things. If not, you just sit tight and you wait. Looking at this cycle relative to the previous two cycles, the black line there, we are in the wheelhouse of expectations based on percentage moves from the cycle low. We're also in the zone of nothing. Generally, we're on day 642. Things start to get exciting into day 700. Again, that's Q4. I keep saying Q4, but we know the election is November 6th. So we could have a bunch of nothing even into that. We could have a bunch of nothing until after that gets resolved. We could have some moves into November and then sell off on the election. All sorts of possibilities, right? So ultimately, probably not until the election is decided will we have a resumption of bullishness, assuming this is going to be bullish. Just some potential roadblocks to watch for, well above 70 if we do break out. Last week, Jay said the magic words, Jay Powell of the US Fed. He said the magic words in that he said rates are coming down in not so many words. He was more dovish than more people thought he was going to be. The focus clearly is on unemployment and less on inflation. I'll talk about trueflation tomorrow, but inflation, regardless of what anybody wants to think, on a year-over-year basis is down and continues to move down. The aggregate inflation is up and continues to move up and will likely never ever move down in our entire lifetime. And that's really hard to understand, but the rate of change of inflation has slowed considerably. So that part of the dual mandate is almost back to normal. We're probably going to be around 2.6 for the month. The issue now is unemployment, which again, I'll talk more about tomorrow. It's looking more troublesome. So of course we have to dodge a recession on the crypto side, but BTC liked what Jay had to say. Most everything liked what Jay had to say. Now everybody's coming out saying, you know what? They're saying, look, I was wrong about, not me, but them. They're saying, this is me role-playing as them. I was wrong about the recession for the past 2 years, 3 years, heck, maybe even longer than that. But you know what? The first rate cut, it's always bearish. It's going to be bearish. It's going to go down. It's going to be a recession. It's going to be a hard landing. They're very sure, these people. They're very, very sure that we're headed lower. And that's possible. But again, you're going to see that on the chart first. You're going to see that in legacy. You're going to see that across the board on the risk assets, the riskiest of risk assets. I'll show you that stuff on legacy. We're just not seeing that yet. So with BTC, we're above the cloud. We're above the 20-week moving average in the yellow there. We're above the 200-day in the red line, and we're above the 50-day in the green. The 5200 is still crossed to bearish. The cloud itself does not have a bullish Kumo twist. TK crosses below the cloud, all this fun stuff. We are getting to the point. We are getting increasingly bullish. The Adam and Eve formed. We did not make a lower low. Then it went higher, and now we're starting to check off the correct boxes to potentially move higher. So we're getting there. We're getting there, but we're not quite there. This is the ultra low time frame, 4 hour. We broke out, didn't even reach this target yet, which is honestly maybe a little troublesome. Maybe this is a high and tight flag. Maybe it's just the weekend. Bunch of nothing happens. But ideally through the week, we're able to muster something to 66 plus. That's what the inverted head and shoulders Eve measures to. The Adam and Eve, or the ascending triangle, however you want to think about that, measures to the 70s. And we'd be closer to breakout territory at that point. So we do have a series of hurdles to get through. Most of the selling that we're going to see has passed, except the U.S. government. The U.S. government selling is sporadic. They still have 13 billion, I think, in BTC rather, notional. We don't really know when that's going to happen, but Germany's done, Gox is done for the most part. Genesis, Grayscale. We've got FTX claims coming in the form of USD to people later on in the year. That'll be a nice lift probably for alts to look for later on in the year. But most of the supply overhang for BTC should be behind us at this point. On the high time frame cloud, a TK recross on a 3-day would probably be enough of a signal to push us higher. This is going to take maybe 4 weeks to twist if we can maintain this level. So it's not going to happen anytime soon, but it's something to watch for, much like it was around this time last year. Same position relative to the cloud. In this case, it's a full reset of bullish momentum. Previously, it was a bullish reversal with a bullish continuation slant. So this is still bullish continuation, but it would be confirming that we're out of this, right? We're out of this downward chop of a mess. And we're probably seeing ETF flows, very large days. We're probably seeing the dollar even lower. We're probably seeing legacy even more excited and happy. We're probably seeing all of the right things happen, along with jobs probably ticking up as far as on unemployment slightly, but not too much. And there's a little bit of a Goldilocks there. Inflation probably in the rear view. So those are the things we'd like to see going into Q4. Looking at CME, BTC, that's also above the cloud, doesn't have a bullish cloud or TK cross yet. So that's something else to watch for throughout the week. The reason to watch CME BTC as opposed to spot, it cuts out the noise. It's not 24/7, and that might be a good thing. You're getting all the same signals as spot, just slightly different, slightly adjusted. This latest signal wasn't really a long, so maybe less noise. Again, something to watch for, right? But if we are closer to the top or we're consolidating at the top, you're going to see CME flip bullish. You're going to see IBIT flip bullish for the first time in a while. We have a cloud that we can actually look at. We have enough data that we can look at this entire cloud. And it is also above the daily cloud. Obviously, the level for IBIT is 40. If we can get above 40, that's great. MSTR is another one. You're going to see MSTR reach for like 185 if this can maintain bullishness. So we're not there yet. This could still continue to chop around. It's on the bullish side of neutral, but we're not quite seeing full bullish signals just yet. BITX, leverage BTC, also telling you it's not quite time yet. It's not quite ready based on the trend. There's maybe a whole bunch of things, Adam and Eve with the gap, inverted head and shoulders, diamond bottom, all this stuff, right? But one thing it is not is bullish on trend just yet. Then there's also the miners, which probably won't get much love just yet because they're still on the struggle bus. The most love they're going to get is on the AI side. So I'd watch the most AI adjacent miners this week. It relative to NVDA earnings, depending on how NVDA earnings go, I think you have to go into earnings just assuming that the market's going to like whatever they hear and we're going to go higher, because that's what's happened every earnings period for the past X periods, right? It's just higher, 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 higher. So if NVIDIA does well, expect those miners to do well. If NVIDIA doesn't do well, expect the AI miners to do less well. But as a group in WGMI, we are still not bullish yet. And as a product, this has just been a whole lot of chop, right? You've had really one signal in 2024, and that was a breakout of this consolidation here. And now we're not back above the daily cloud yet. But the beta, the leverage, should outperform eventually, right? MSTR, miners, BITX. If BTC is bullish and does continue, this will eventually outperform BTC. It's just not giving you the signal yet. Before we go any further, let me mention today's video sponsors, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payward Ventures Inc., PBI, DBA, and Kraken. And on the non-USD side, for the alts, Kraken does have a bunch of pairs relative to BTC, relative to ETH. Heck, if you want to even get into the JPY game or other FX pairs, that's also on here. But on the ETH pairs and the ETH side of things, Sol ETH continues to hold at the highs. Now, there isn't enough data here before December 2023 because that's when it started trading on Kraken. But this looks very bullish and continues to look very bullish. And it's maybe something else to watch on the crypto side, where if ETH continues to lag, continues to see outflows from Grayscale, continues to be ignored, you will probably see strength here eventually on the Sol ETH pair. And that's something to trade. You know, obviously we've talked about ETH BTC. You know, that's been a continued rolling dumpster fire and just nothing but bearishness. You can also trade that here. The problem with trading the pairs, a lot of times they're just too volatile. Generally the direction you can be pretty certain on based on trend metrics, but the intra-week, intra-day stuff can be very, very difficult to nail down. But the broad strokes and the high time frames usually pretty clear. You know, this is not bullish ETH at all. It just isn't. And you're seeing relative strength on Sol compared to ETH here, where you're not seeing that on ETH BTC. I don't even think you're seeing that on Sol BTC per se. But if you had to force me to pick a pair to trade on the long side, it would be Sol ETH. Sol BTC looks good, don't get me wrong, but it's still ranging. It's not quite where you'd want it to be above those highs. Like many of the charts I'm about to talk about, there is a case to be made for just run-of-the-mill cup and handle on Sol BTC. You have this on BTC USD, you have this on a lot of charts, and it measures to a crazy target, right? So if you want to trade that, you can certainly do that on Kraken. For ETH, we're below the cloud. There's just nothing much else to say. It's got a death cross still. It's just flailing. I like it better above 3,000. Until then, it's kind of just a no-go for me. Missing out on this to 3,000 just isn't that big of a deal. If you're expecting this to go to 10, who cares, right? Just wait for confirmation. Wait for everything to be bullish again. We're not there yet. Sol also chopping around quite a bit. A nicely drawn Adam and Eve here. Nice little textbook Adam and Eve. The ultimate breakout level is still the same. You really want this above 200, but 185 would probably be enough. First, you need to see it back above 160. You know, let's get above 160 and talk. Not a lot of strength here. Not showing a lot of strength here. Again, relative to the election, this may trade with Trump odds. This may trade into the election with Trump odds. If Trump loses, this may sell off because there'll be a perceived hostile crypto regulatory environment for alts that don't already have products. So I would be careful of that into the election, but that is a ways off. And this could have a run. You never know. Just something to watch. But 185 is definitely the level. All right, for legacy. Now, everything I'm going to say applies to crypto. That's why we talk about legacy. And to see the dollar sell off as swiftly as it has is turbo bullish for risk assets, including crypto. It sold off at this point at such a fast rate. We may see some consolidation before breaking below the psychological level of 100. But this breakdown, this eventual breakdown, measures to sub 96. If we see anything like we saw in 2020, where we saw a move from 100 to 90, 92, whatever, right? We'll take it. That will act as a tailwind for crypto, for risk assets, act as a tailwind for people to get out of treasuries, maybe go down the curve, maybe go into risk, maybe go VC, maybe go whatever, right? But it gets people investing elsewhere other than the US dollar. So I would never short this. I would just trade other stuff, right? Trade other stuff that should benefit from dollar weakness, which would be primarily crypto, EM, small caps. The days of the Mag 7 strength may be behind us because we should see breadth widen out on the small caps, on the risk stuff. That's just been beat to death for the past couple of years. And we're seeing that in the charts. On the bond side of the equation, TLT continues to look excellent. 3-day cloud, holding above the 3-day cloud, bullish ticket across bullish cloud. What more do you want? My plan is to sort of hide out in duration a little bit until I'm more sure that things like BITX and MSTR and BTC itself is bullish, right? Because this stuff is already showing strength. It just is. Shy, this is the 1 to 3 year treasury, looks very, very good. And you'll probably get a chance because of seasonality, August, September for BTC, at least I'm telling myself this, you'll probably get a chance to rotate after this continues for a little bit, TLT, Shy, Ag, whatever, to rotate into BTC without sort of missing anything. You know, we're still waiting for confirmation on the crypto side of things, but this is very much already bullish and these charts look phenomenal on the bond side of things. For gold, much like SMH, the ETF, much like NVIDIA, honestly, gold spent 4 years making this ascending inverted head and shoulders. It measures to roughly where it is now. It for sure, gold has more room to run because it has a decade-long cup and handle, but on a relative value basis, it may run less high in the near term compared to some of this other stuff. I still like gold here. It still looks great. There's nothing bearish about it. There's nothing wrong with it. Maybe a little bit of a TKC clamp on the weekly, but I just think compared to treasuries here, bonds make more sense to me than gold. GDX might make even more sense than gold. This measures to some absurd target. I'm not really a fan of gold miners, but this is a chart, a setup to watch. Is this a rising wedge? Does this break down? How does this look on trend? It still looks pretty good. It still looks good for, again, some crazy target way past 2x from here, eventually, if gold miners catch up. S&P Mini, this is kind of what I'm expecting. This is S&P futures. I'm kind of expecting this inverted head and shoulders thing this week because, again, everybody is just so bearish on the first rate cut. That's all I'm seeing is the first time we cut rates, it's all over for everybody. So we sold off from the yen carry trade stuff. We clawed it all back and then some. And man, it would be funny if we go to a new all-time high before the first rate cut. So maybe everybody's going to be right. Maybe we are going to be bullish into the rate cut, bearish post-rate cut, whatever. But this also measures to some insane target. Definitely something to watch along with NVIDIA this week, which has an even higher target than ES, than NQ, E-mini. All this stuff to me just looks like an inverted head and shoulders ready to go. Now it could have more time in the right shoulder. It could give you a little fake out, then back down, whatever, right? But the table is set for bullish continuation, bullish reversal, big time on the indices. And on NVIDIA, because of earnings, again, like, are earnings good or bad on the 28th? That's the first part of the decision tree. Does the market think they're good or bad? If bad, do we just make a deeper right shoulder and then recover into September? This is a 4-hour, so we'll know pretty quick. But as it stands now, the cloud is already saying everything looks totally fine here on NVIDIA for continuation. And this is a large move potentially into all-time high territory. And we saw the same thing into earnings in May, where we had this, albeit a flatter, inverted head and shoulders fractal, but an inverted head and shoulders fractal where we gapped up, we broke out, we gapped up again, and we just kept gapping up, right? So it's not out of the realm of possibilities. It might be worth a little puntarooski. You just have to be able to stomach a bunch of earnings volatility. But the cloud likes it where it stands here. And this is my problem with SMH as a group, the semis as a group, as opposed to IGV and Hack, which I'm about to show in a second. They are at the horizontal resistance of their cup and handle, whereas SMH, similar to gold, it looks bullish, it's still bullish, but it sort of had its move, and on a relative value basis, we may see other things start to move outside of the strength we've already seen from SMH. And if the earnings disappoint from NVIDIA, one thing to watch for throughout the week would be head and shoulders here on SMH. You've got AMD, Micron, SMCI, right? All this other stuff that probably won't be too excited if the market doesn't like what NVIDIA has to say on the 28th. And as far as the upside here, it just doesn't look as appealing as it did in October based on structure, right? That could change. But when I'm looking at this versus IGV, this is the tech sector, ETF or Hack, which is cybersecurity ETF. A lot of this is like CrowdStrike and Microsoft and some other Mag 7. It's worth investigating what's in this stuff. But to me, on a relative basis, This looks like a better buy here than at SMH, purely on relative value, purely because it's back at all-time high, cup and handle, looks ready to go. Now, is it SMH going to be bearish if NVIDIA is bearish or bullish, right? Is it going to be opposite NVIDIA? No, but I still think both of these charts look better than SMH. Then there's leveraged IWM. This is TNA, and it looks great. It looks really, really good. You've got a multi-shouldered inverted head and shoulders, multi-year inverted head and shoulders. You've got rates as a tailwind coming down, and relative to BTC, right, this thing looks ready to go, whereas BTC will have a bigger percentage move, alts will have a bigger percentage move, right? All that stuff is true, but in the near term, some of this legacy stuff looks much more appealing to me than crypto does at the current juncture. Even LABU, this is a biotech 3x ETF. Now, I wouldn't go loading up across the risk spectrum on all these risky leveraged ETFs, but if you're looking for something to trade, these charts, again, look way better to me than altcoins. Look way better to me than even BTC pre-breakout. This could fizzle out and go nowhere. I wouldn't sit in this stuff for multiple months and live in this stuff, but it is very interesting as a setup down here. If we do see some breadth widening out, and you've got stupid stuff like this, RBLX. I mean, there's a few charts out there that kind of just have done nothing for years that may catch a bid. You know, we may see a short squeeze. I don't know. The technicals are already favorable. If this was the opposite, if this was showing lower lows, if this was showing a series of moves down versus returning to the top of the range, breaking out, the cloud loves it, right? Yeah, I'll take a swing. You know, why not? It's better time now than October 2023 or October 2022. We're nearing the end of a potential consolidation here. So yeah, I don't hate it at all. Another one, lastly, even this stuff, New York Community Bank, okay? Some of these regional banks, community banks, whatever, however you want to think about that, have been just beaten to a pulp for a very long time. Now, as a percentage move, I don't know, right? But as a pattern, as a setup, yeah. Inverted head and shoulders versus ascending triangle, back above the cloud, something to watch. And if anything, if you trade none of this stuff, that's fine. But as a proxy for alts, my guess is, as most of the stuff I just talked about on the legacy side gets more bullish, you're going to see alts move higher. So yes, we've got green shoots. I'd still be patient. I wouldn't expect a miracle. On the crypto side, I think there's plenty of fun stuff to do on the legacy side. In the meantime, that's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.